Let's bring in Chris Harvey. He's the head of equity strategy at Wells Fargo Securities. Chris, thank you for being with us tonight.
Thank you.
The bleeding won't stop. That was the clip that we ran there. When will it?
That's unclear. But what we're seeing and what we're thinking about is we came into this year much more defensive. And now what we're seeing with the market down almost 30% from the high, we're beginning to see opportunity. We're beginning to see situations where value is being uncovered. And slowly, we think you can start putting money to work. It's unclear when the bleeding is going to stop, but we do see a risk reward that's starting to become a little bit more enticing, a little bit more attractive.
Hard for me to hear you say that when at the same time you have a street low earnings projection.
Right.
How do you come to that? How does that square itself?
So I think it squares pretty well, because one of the things we wanted to do is we came into this year at 166. We were toward the low end of the street. We were one of the lows on the street. Now what we're saying is we know that net interest margins are being squeezed on the banks. We know that commodities are down, and that's going to hurt earnings for energy companies. So we want to be a lot more conservative. If we can be more conservative and we find value in the market, then we think there's real value in the market. We're not fooling ourselves. And we want to be a lot more conservative, because when this washes out, we're going to have some really good opportunity. And you're beginning to have valuation support in and around these levels, especially with a 152 EPS number.
I hear you. What's the buy signal? I mean, viewers watching are going to maybe thinking the same thing you are. What is the signal they need to look to know that it's okay to put toes, if not feet, in the market?
Okay, so what we're saying is we're not going to call the bottom. We're not trying to call the bottom. What we're trying to see is we're trying to find good risk reward. And you're beginning to see that. We want people to leg in. One of the things we don't know is we don't know the length and we don't know the depth of the coronavirus. And so we slowly have to go back into the marketplace. But when we're down 23%, which is very comparable to what we were down in 2002, opportunity is presenting itself. With regard to today, one of the things that we think is occurring is the market is forcing the politicians to act. If you go back to 2008 with TARP wasn't passed the first time around. The market plummeted 9%. President Trump is talking about some sort of fiscal policy. If you look, McConnell had actually said, we're not going to recess. You're seeing politicians starting to get in motion. You're seeing the market start to press the action. And so that's a very good sign. These are the things that we need to see. What we also need to see is we need to see the credit market starting to stabilize. And basically, we also need time.
Well, we'll see if we get it. We'll see what tomorrow brings. It's good to talk to you tonight, Chris. Thank you so much.